This week, portfolio performance has been dominated by the surprise call of a general election on the 8th of June. That's been well received by markets on the assumption that we'll have a Conservative victory and it will strengthen the hand of Theresa May in her negotiations. We've seen the pound strengthen against all major currencies, as we can see from this table, and we've seen the other side of that with the FTSE 100 softening and the FTSE 250 outperforming that because of its domestic focus. That continues to reinforce our view that UK's equity holdings within portfolios should be domestically dominated to offset some of the currency risk from the foreign exposure. In terms of sectors, we've seen good performance from technology, from consumer discretionary and financials. They tend to outperform when the oil price is coming off, and we've seen a poor performance from the energy sector as inventory numbers have been fairly high. In terms of the financials, saw a good reporting season over the week, and last night Visa probably encapsulates what we're seeing in technology and consumer discretionary, as we saw processed transactions rising very nicely. As you can see from this chart, Apple Pay and the move to chip and pin have enabled Visa over the last 2 years to continue to grow those payment numbers, of which they're getting a fixed 7 cents per payment. So that remains an interesting idea. In terms of the week ahead, the key issue will be the first round of the French elections, which take place this weekend. With a third of the French electorate undecided, this event has caused significant anxiety for markets. We've got a very binary situation where two of the candidates are anti-EU, and then you have two centralist party candidates. At the moment, we're seeing the most likely outcome is a Macron-Le Pen second round, of which 60-40 in favour of Macron is the current betting odds, with around 25% chance of Le Pen getting in. Further risks have been the late run in Mélenchon, who's seen significant traction over the last couple of weeks, as well as the ultimate risk that if Fillon does lose in this round, where their voters, Fillon's voters, go, whether they go to Le Pen or Macron should they get into the second round. So plenty of complexity there. The other key issue is that, should Le Pen or Mélenchon get in, there would be a cohabitation where the President and the Prime Minister were at different parties, which would require some sort of constitutional amendment to leave the EU, which is the key market risk. And we've also seen support for the euro rise over the last month from around 55% to 65% in France, and support for the franc fall from 25% to 21%. We continue to believe that there is a significant political discount priced into European equities, and a series of positive election results will start to reduce that, albeit it will remain due to the structure of the EU. As you can see here, we've seen European markets get significantly cheaper against the US market over this period. As we've gone into this election season, we've got a good result in Holland. The German political situation looks to be converging back to a more moderate centralist stance. But clearly the French election is an important event. Looking at the week ahead, it's extremely busy. For us, the key area of focus will be the cloud computing providers in terms of Alphabet, Amazon and Microsoft. Just looking at cloud, we continue to see, as Gartner is alluding to here, very strong growth rates in cloud adoption. That's it from me. Thanks very much.